Hello traders, Gary Wagner here, approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, October 28th, 2020, and this is the Daily Report for Gold and Silver. We had a major meltdown in the financial markets across the board in U.S. equities. Gold and silver also followed suit. We will look at the Dow today, but more importantly, we will focus upon whether recent activity, especially in gold, has caused any major technical chart damage, with one caveat. This market is headline driven. Any change in the headlines will make technicals basically disappear. With that in mind, let's take a look at current pricing. Absolute carnage and devastation across the board in the financial markets here in the United States, as well as the precious metals complex. Gold lost 1.8% on the day today, trading down by $34.50 and settling at $877.40. The question we will answer when we pull up our technical studies, is this indicative of major chart damage? When we look at spot gold, that lost $31.01 at $1876.90, and silver sustained one of the largest percentage drawdowns, losing $1.14. Currently fixed at $24.42.5, and that was largely based, but not completely based, upon dollar strength, gaining about 0.6% at 93.49. SLV losing 4% or 95 cents per share, 21.78. GLD sustained a drawdown of 1.61% at 176.13. Palladium was the only precious metal to sustain a greater drawdown, 4.58%, with platinum only losing about 1.76%. But really, the carnage came in terms of U.S. equities. The Dow Jones Industrial Average lost 943 points. That's almost 3.5% today. And if you add up the losses from Monday to today, it's approximately a 16% drawdown. But what I found most alarming when I looked at a daily chart, and that is this on the lower left-hand corner, is it opened at the high and it closed almost exactly at the low on the day. Let's take a look at our technical studies. Over the last 4 trading days, beginning last week, but accelerating this week, we have seen absolute carnage in the U.S. equities markets. Typically, I will start with the gold chart, but this is something that warrants all of our attention. Over the last 3 days, the Dow Jones Industrial Average has declined by approximately 16%. But in terms of looking at action through candlesticks, there's something even more alarming. When a market opens exactly at the high and closes at precisely the low, it is called a Marubozu. It simply means shaven head, and it represents the strongest of any bearish candlestick type. The reverse is true for a bullish Marubozu, a green Marubozu. We got a small move yesterday, a wide gap today as it gapped much lower, and then once again we got this Marubozu. It is opening at the top. There is a slight tail, maybe a tick difference, which means that the exact technical term for today's candle is a opening Marubozu, meaning it opens at the high and closes very near the low. It typically represents that there could be a continuation of selling pressure in the days ahead. But as gold and silver traders, the real question that we need to ask ourselves is, what is the implications of today's sharp decline, roughly $30+. It is trading in Australian currently at 1878, right near the close. Without a question of a doubt, we have seen a breakdown below what we have been identifying as a major level of support. We talked about the fact that as it broke under it, it appeared to me as though the market was consolidating. And up until today, that was definitely my interpretation. I would interpret these candles in the same way without the knowledge of today's candle, but today's candle absolutely was a game changer. First, It broke like a vengeance through 1900. It traded below 1878, which was the next area I would have looked at, and it's really based upon these two tops here, with major support occurring in a zone, and that zone can be seen right here. The bottom of the zone comes in at 1845.40. That, of course, represents the 0.38% Fibonacci retracement up until about 1860, which is roughly where these lows that came in towards the end of September occurred. Therefore, this entire area, as far as I am concerned, is the next level we would look at for gold to actually find support if it doesn't recover at current pricing right here. The key is this. This market has not been highly moved by technical factors, although they are playing a role or a part in recent movements in gold. It is a headline-driven market, and it is based upon growing concerns right now of a pandemic that has reached epic proportions, the White House stating that there is nothing that they will do to stave off an increase in the number of infections, as well as the uncertainty of the election next week. When you combine all of those together, you really get a perfect storm for volatility. We talked about that last month. We talked about it this month, that the one thing that I am certain about is that we will see extreme volatility as we get closer to the election. We will maintain our neutral stance with no active trades in gold or silver. We are still long GLD and SLV. That has come under some pressure, but that is a long-term play which I'm hoping will enable us to maintain a position through the presidential election and the announcement of the next winner. And for our silver traders, while it sustained a much greater percentage drawdown today than gold did in terms of the next level of support, prices currently are much closer to that support level. We are pegging support at 23.05. Current pricing of silver is 23.47. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.